What are some of the key themes from this quarter? Risk-off sentiment dominated this quarter, with global financial markets coming under pressure. The markets were concerned about the US Fed's hawkish tone, but Russia's invasion of Ukraine presented another significant risk. We saw equity markets sell off as a result and energy prices spike, threatening both the global growth and inflation outlook. Despite the global negativity, our market proved resilient, and the national budget pointed to further fiscal improvement. Although foreign equities sold off, the JSE managed to end higher, driven by resources and financial stocks. We also saw the rand strengthen, with high commodity prices supporting exports and boosting our current account. South African government bonds rallied, with nominal bonds outperforming inflation linkers despite domestic inflation shifting higher. Foreign asset classes sold off broadly as risk appetite waned, but global bonds provided little safety, with US Treasury yields rising. The global economy is still expected to grow this year, but we are seeing estimates being revised lower. Russia and Ukraine together make up only a small portion of global GDP, but the indirect consequences of the war are negative. There is also limited room for policy support, given low interest rates and high inflation. So the rollback of economic stimulus, as well as tighter monetary policy, will have a cooling effect on growth. The domestic growth outlook has less downside risk because growth is already quite low, and the commodity backdrop is offering support. South Africa won't be spared, though, if the global economy were to enter a period of pronounced weakness. Our multi-asset portfolios have been positioned for a positive cyclical backdrop by being overweight growth assets. That view is being challenged this year, but we've been reluctant to make major portfolio changes given the volatility and lack of visibility. Our view now is that given the global economy's late cycle, and that the downside risks we see will probably have longer lasting consequences, we have grown more cautious. We are therefore adjusting risk exposure down slightly while also taking advantage of the new foreign investment regulatory limits by adjusting portfolio strategic asset allocations as appropriate. For more information on our current thinking, please read the latest edition of Talking Points available on our website.